expectation as well as the long-term expectation. All right, based on what price told us. Okay, so let's go ahead and get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for January 3rd, 2020. Q is going to be down almost 1%. SPY 0.75% was down more. It was about a 1.3% gap in the Qs and then got bought. Now, if you recall, coming into today, we had a bullish bias, okay, meaning that we expect gap downs and sell-offs to get bought, okay, that sell-offs, gap downs as buyable opportunities. Now, the things that we want to look for that potentially to change is acceleration, maybe overextension into the move up, something that maybe resembles a blow off top, or I think we're quite a ways away from something like that, but something that we want to be on the lookout for, or a big gap down that breaks the trend. So today's gap really didn't do either of those. It was a bit of a gap down, but not enough to break the trend here. Okay, so going into Monday, still gonna have a bit of a bullish bias. We'll see if this gap down today gives us some follow through, in which case we can start to look for some kind of trend change on the hourly. But you can see today's gap down actually gapped down to support and then got bought. We are retesting it here. Okay, so I think it's gonna be interesting to see if we get more news events. You can even kind of trace them throughout today's price action. I think there was some ISM news, some news about kind of troops being sent to the Middle East. And so, you know, there were some things that were moving the market. For the most part, the market didn't seem too bothered by them, okay? But, you know, price will tell us which things really matter to the market. So we'll see if we get some kind of hourly trend break first, okay, for this hourly uptrend to end, right? But the weekly, the monthly still remain bullish. Okay, so just want to be clear. It doesn't mean that it's a necessarily good buyable opportunity. Just expect that sell-offs are buyable opportunities. That I expect that over the next days, weeks, we still look higher. Okay, going into Monday. All right, so we'll see what we get, and if we get any kind of news over the next week or so that changes the picture here. All right, let's go over. I only had one call today, and that was on the CC. Okay, now the CC we played as a breakdown. Okay, had a pro gap underneath, a little bit of a pivot. There was some congestion there still to the left. And I also mentioned when we were analyzing the play, would have preferred if we had gapped underneath some more important support there. But I did like the relative weakness. I did like the base at the lows. And even though it gave us a nice initial drop, was not enough for us to have a nice play on this one. Okay, so the entry was under 1690 with a stop at 1707. Okay, we ended up covering it over this 15-minute bar right here, over 1684. So more or less break even on the play. And even if the play had, say, stopped out, didn't give us a chance to trail, I don't have a problem with this play. You know, it's one of those things that I look at this play and I know that this is a play that I should take, because the more that I take them, as long as I'm taking ones that fit the criteria that I'm looking for, that they will be a worthwhile play to take. Okay, now I do think the CLB was better in a lot of regards. Okay, not only did it spend more time setting up the base breakdown, the gap down was more damaging, right? So I do think the CLB was better, but the CC was still a play that I considered worth taking. Okay, and we know that they can't all be winners, even when you are very, very picky with your criteria. Now, most of them will be, but even this, okay, fine, just mainly a break-even play. Didn't quite give us enough. I was looking for 1660 and even for a target 2 deeper, somewhere around 1620 into this support area. And as you can see, the low ended up being 1670. So all it gave us was a max of about 20 cents. I was looking for 30 to 50 cents, and so ended up being trailed. So that was it. I thought it was kind of a quiet day. I'm not one typically to trade a sector when the whole sector is gapping up or down. So, we had energy that was gapping up and then eventually lost the gap. And we had gold that was gapping up. We had the market gapping down. So, as far as our favorite gaps, actually, the favorites today for me were the LW, but I thought this was too spready. As a long, what a nice gap here. If you know how to rate the gaps, you'll see why this is as good as they get. Tier 1 gap on the LW, but I thought the spread was too much. I had like 50-cent spread at some points near the open, so I passed on it. Would have been pretty good opportunity there to find a long entry into. And then the other one was the MD as a gap down, but that got bought. Okay, so right off the bat there, it actually opened late, got bought. So I kind of thought there wouldn't be much for me to do because these were the favorites, these were the focus, right? We've been talking about all week how, important it is to do the pre-market prep. And I think I made it clear, not just in finding the good plays, but if the top gaps don't follow through, knowing that maybe it's not a good time to overdo it, right? So not a very active day for me, only called the CC, ended up being just kind of a wash there. So, but still not a play that I have any regrets over. I don't think it was traded out of boredom or anything. It was a valid play, valid entry, valid setup. So, was overall, I think, a good week. So, not too bad there. All right. So that's going to do it for today's market wrap. Hope you did well today. If not, we'll be back at it on Monday. All right, we'll see if the weekend brings any additional kind of volatility or kind of changes the picture here, because we do have some additional things now maybe going to be disrupting the flow of the market. So we'll see. And if that shows up, then we'll just trade accordingly. Okay? All right. Have a good weekend. I will talk to you on Monday.